Alright, my name is Brian Watkins, and this is the second tutorial for Accounting 231 and the QuickBooks practice number 2. So this is going to be a little more detail on inventory transactions, and we're going to go about beginning in the same way. Okay, we're going to add one more step at the beginning, and that's going to be sales tax. So follow along. We're going to have a retail shop or online commerce, and we're going to make it a partnership or LLP. So we express start. I've called it QuickBooks practice number 2. Let's change this now to a retail shop or online commerce. Retail shop. Okay, which is probably the most common type of business. The company type is a partnership. You can leave the tax ID number blank. Continue. Don't need to add the address or other identifying information. We just need the name. And again, it takes a long time for these companies to, the files to be produced. So I'll pause it here till it's done. Okay, it finally dropped me into this screen. Just go to start working. All the other stuff is just designed to help you translate an existing business into QuickBooks. Okay, so now we're looking at the actual QuickBooks screen. I'm going to shrink it so that we can see it all in the same place here. Alright, here we go. Now, in order to fulfill the requirements, we have to select preferences and enable purchase orders and inventory. You've done that before. Edit, Preferences, and we'll go to Items and Inventory, Company Preferences, click the box, hit OK. That's all you have to do. It'll close everything, it'll blank out your screen, but all you have to do to come back is hit your Home button, which for me, it's kind of in the middle. For you, it's probably on the left-hand side. So far, so good. We've got our purchase orders, inventory, and receiving against inventory. Now we need to do a sales tax. Okay? So we're going to enable sales tax, and we're going to set a tax rate of 10%, and we're going to impose it by the state tax authority. All of that information you need. So let's go back, go to Edit, Preferences. This time we'll go to Sales Tax, Company Preference. Yes, we're going to charge sales tax. And I click on Add a Sales Tax Item. It automatically sets the box correctly. The sales tax name, let's be unimaginative, sales tax. And as soon as I hit Tab, it comes into the description. I can enter as a 10. I don't have to do a 0.1 like I would if I was in Excel. And the vendor that I'm collecting for, State Tax Authority. And it's treated as a vendor. So when I hit Enter, it will say, do you want to add to the list? Of course I do. You always add to your list. And it automatically knows it's a vendor and assigns that as vendor. Okay, one last thing that you should remember, in the general preferences, I'm going to change sales tax. It'll also come up with another selection box that will be pre-marked. See this? It's already checked, and that's good. All you have to do is hit OK. Blank everything. Alright. On the general My Preferences, I'm going to turn off the beep when recording a transaction. You'll want to do that in the testing center, and you'll want to do that in the library so that you don't bother everyone around you. Everything's okay. And now I go back home, and I will see an additional icon here called Manage Sales Tax. And when I create sales receipts, or when I create invoices for credit sales, it will automatically calculate a 10% sales tax. Okay, now we're ready. We're going to deposit $10,000 into an account at the Bank of Laie. Now you'll recall that the Bank of Laie account hasn't been created yet. So the first thing that happens when I click on the bank is it asks me, do I want a bank account? I say yes. And I'll call it Bank of Laie. If I want to be, really diligent here, I'd say cash. This is my cash account. Okay, there's my deposit screen. I have to be careful to set the date. It's January 3rd. And my $10,000 is coming from two different sources. $5,000 from me and $5,000 from a friend that I'm going to be a partner with. So I receive from, I'm going to put my name here. And I hit enter, quick add, and I'm an owner. I'm not a business that does business with me. I'm not a customer or an employee. I'm the other, the owner. And the account is going to be Partner 1 Equity. You can see that there's accounts for Partner 1 and Partner 2. You could probably add new accounts for Partners 3 on this however many partners you have. But if you failed to start the program as a partnership, if you had entered sole proprietorship, you would never find these accounts. So that's why it's very important that you set things up at the beginning in a correct fashion. So Partner 1 Equity, and so this is opening capital deposit, and I'm going to put my cash in of $5,000. Now I'm going to click on the next one. My partner's name was John Walker, and I'll hit enter, quick add. John is also an other, he's an owner. And I'll put this from Partner 2 Equity, and it's opening capital deposit. Now, when you deposit directly into an equity account, sometimes it'll want to fight you on that. So just remember, you're in charge. $5,000. Maybe not so much as a partner as it would for a corporation. But let's take a look at everything now. Our date should be the 3rd of January. 3rd. 10,000 total, 5,000 from each of you. 10,000 total, 5,000 from each. And that went right through. Okay, it's when you have a corporation that it won't like you putting money directly in. All right. Next transaction. You and John agree to purchase hand-carved picture frames. Now here, always pay attention to what kind of business you're doing. I told you up at the top, your partnership will sell art produced by local craftsmen and women. So we're going to go buy these hand-carved picture frames, and we're going to prepare a purchase order, and we're going to buy 3 different products from this vendor. We're going to buy 100 of these koa wood small frames, 50 large frames, and another 50 palm tree carvings that has a place for a clock in it. And what we're going to do later is we're going to buy clocks, so we're going to stick them together and sell them as one unit. So we're not only going to sell inventory as a part, but we're going to do an inventory assembly. So let's do the first purchase order. And what we need to do is 100 of the koa wood. We're going to call our people Haula Woodworks. So purchase order number 1, still the 3rd. Oh, Haula Woodworks. Enter, quick add. It automatically knows it's a vendor because it's a vendor box. Okay, the first item. We're going to add a new item. It's going to be a part, and we're going to call it small koa frame. We don't have any secret information here, so we'll just keep it all the same. Now, very important that we tell the QuickBooks program how much one of those frames costs. We are going to pay $15 each for the koa wood frames. So I've got to put 15. If you don't do that, you're not going to get any cost of goods sold, and you're not going to calculate the sales price right. So or your sales revenues. So cost is 15, and let's look at the sale is koa wood frames 35. So my sales price is 35, and my income account is always set to merchandise sales. Okay, on our first example we set it to just plain sales because we were also selling services. But here, merchandise sales all the way through. Don't create any special income accounts because it's always going to be the same. So that's the koa frames, and we're going to buy 100 of them. So make sure to come back once you've defined it, put the number that you're going to buy. Okay, our next one is going to be a large wood frame. So I'll just say large frame. Large frame. And the large frame is going to cost us $45 for the large frame, and we're going to sell the large frames for $100. So it cost me $45, sell them for $100. My income account is merchandise sales. I'm good. I'm going to buy 50 large frames. 50. Okay, now we're going to have the palm tree carving. Now we know that this is going to be put with something else. Palm tree carving. Okay, it's going to cost me something. It's going to cost me $25 for the palm tree carvings. So I'm going to put 25, but I'm not going to sell them separately, so I don't have a sales price. I'll do that later, but I have to have a merchandise sales income account. That is a must. But just remember, if it's a part that's not going to be sold separately, you can set a sales price if you wish, but you don't have to. And I'm going to buy 50 of those. So I have 50. All right, this is my first inventory order, and it looks like $5,000 worth of inventory. Everything looks good. I'll save and close. Let's go back. Now, you have to be really careful that you've got all of your information out of this. So, looks like I have. January 7th, we're going to send purchase order 2 to Hong Kong Clockworks for 50 small battery operated clocks. They have a particular code. It sells for $12.50. Comes with a battery. Okay, purchase order number 2. It's automatically number 2. And we'll say Hong Kong Clockworks and add them. And then this is going to be, let's just call it the small clock. And add new. Did that? It didn't come through. Okay, let me see if it would quick add here. I haven't done that. Small clock. Enter. Would you like to add it? Yes. So it will bring it through if I did it right. Small clock. And the cost is going to be $15, and the income account is going to be merchandise sales. So let's take a look there. No, it's $12.50. Okay, let's back that up. So I can change the rate by going $12.50. And the quantity is going to be 50 of them. Alright, and they come with their battery, and this is the clock purchase. Looks like my keyboard doesn't want to work. Clock purchase. Now, as with all entry screens in QuickBooks, if I were to realize I made a mistake, I could go back to purchase orders, I could hit previous, and I could make any changes I need to make. Okay, so we've got the clocks coming. Now we're going to write a check. It's January 10th, and we're going to rent a booth for a trade show to Honolulu Art Fair. So write a check. Unclick the box so that we take control of the check number. We want check number 1. And it's going to be the 10th of January. We're going to write the check to the Honolulu Art Fair. Enter quick add as a vendor. And this is booth rental art fair. Alright, so we go to our accounts. This is going to be rent expense, which is right there in the list. $250. Booth rental art fair. I think we've got it. Let's double check. Prepare and section 1 for $250 to cover your costs. Good. So we're done. Alright, that's the first page. So now we're going to travel to Haula, and we're going to pick up the order from Haula Woodworks. He's going to charge us 10% tax on top of the price. There's no bill to give an item receipt, okay, and create a bill later. So inventory can come in 2 ways. Either it comes with a bill or it doesn't. So we're going to, for this transaction, we're going to bring inventory in without a bill. So here's receive inventory, and there's the two choices, with or without a bill. So we're going to receive without a bill. The date is the 8th of February. So we're going to go forward to the 8th. Yep, January 10th to February 8th. And let's take how the wood works. So as soon as we select them, it says you have an open purchase order. And so I'm going to say yes, click the box, and that will bring in the items that we just purchased. I can slide that over there so we can see it. Okay, there's the items we purchased. However, we have to pay a 10% additional on this. So what we're going to do is we're going to change the cost of our items here directly on the item receipt. So our koa frame, it didn't cost us 15, it cost us 10% more. 10% of 15 is 150, so it cost us $16.50 for each of the frames. The large frame, yes, I changed the cost, I want to keep it. The large frame's 45, but we're going to add 10% or 450 to it, and it's going to be $49.50. The palm tree carving is 25, it's going to be $250 more, it's going to be $27.50. And recalculate. So you can see that our original 5,000 is now 10% higher, 5,500. Okay, this is a receipt that we hand to the guy that we have purchased from, and we save and close. Everything's right. But now we have to go and enter a bill. The vendor is Haula. Okay, we'll use this item, just click on the date. We'll use the receipt date for the bill date because we're going to create it on the same ticket. So all there is in this extra step is the enter the bill, where you just click on the date, hit OK, and the bill comes in. It remembers the new costs, it remembers the new amounts. There's the amount due. This is our first inventory order. Now let's look for terms. We're going to pay it right away with check number 2, so we'll just say it was due on receipt. And let's go double check. It's on the 8th. Save and close. Alright, now we're going to pay the bill. I click on it. I check the date. It's the 8th. We're going to pay it all on the same day. We're going to pay it with check number 2 because we used check number 1 to pay our rent at the booth. $5,500. Pay the bill. And it's going to be check number 2. Hit OK. And we're done. Alright, so let's go back. We've paid for that. We gave them a receipt. We created a bill. We then paid the bill. Alright, on February 10th, the clocks arrive with a bill that includes extra shipping and import fees of $125. So that means that I thought I was going to pay the clockmaker some amount of money, and now I have to pay them additional. So just like I added the tax, here I'm going to add $125. And there's two different ways to do it. So let's get our inventory with a bill. This is the clocks. Yes, there's a purchase order. Yes, I want it. I'm going to change the date to the 10th. I believe it's the 10th. Yep. $625. However, there's extra shipping and import fees of $125. All of the costs that you spend to get inventory on the shelf ready to sell is an inventory. You keep track of it all together. And that's the value of your inventory. It will become your cost of goods sold. So I have to add that 125. 125 plus 625 is 750. So I can, the last example, I added 10% to the cost and let the quantity just multiply the change. Here, I just changed the final amount. So I just forced everything. It's now 750, small clock. I've changed that item. I'm good to go. So I'm going to say purchase of clocks. All right, the date's right, the amount's right, everything's good. And again, if I wanted to fix it, I could always just go to purchase orders and or the bill. See, here's my bill, and I could look at any outstanding bills. All right, Hong Kong clocks. Are we going to pay it? No, we're not going to pay it yet. So don't pay the bill. All right, on February 12th, you write a check number 3 for $75 to Rebecca Walker, your partner's daughter, for her time and labor in putting the clocks into the palm tree carvings. Now this is going to be complicated because what we're doing here is we're putting the clocks together with the palm tree. So I have to separate this $75 and I have to put it on a new item that consists of both of those. So the first thing we're going to do is we're going to go and we're going to open an account called Inventory Adjustment. So the purpose of that account is not for anything you'll learn in your accounting class. This is a way to get past an issue with QuickBooks. If you think about it, that $75 is going to apply equally to each one of those clocks that we're going to put together. And I don't want to account for all that separately. So we're going to create an inventory adjustment account, and it's going to exist for the sole purpose of moving that $75 into a special screen where we can allocate the inventory. Here's how it's done. First thing I do is create a new account, and I'm going to pay this to, oh heavens, what's her name? Rebecca Walker. Rebecca Walker. She's not going to be an employee because we're contracting with her to do this. She's not going on the payroll, so we're just going to pay her as a separate business. It's the 12th of February. Okay, and this is for assembly of clocks. Okay, so rather than put it into the items, okay, we could go to items and look up the clock, but that would be difficult because we'd have to allocate it over both of the items together. Better way to do it. Here's how we're going to do it. We create an account called, let's go to other account types. This is going to be an other expense, all the way at the bottom. Other expense. It's very rarely used in accounting, and if this were an actual accounting account, there'd be special rules about it. But we're going to just create inventory adjustment for the purpose of moving that $75 into the inventory, despite QuickBooks being a little clunky on that. I mean, if this were a general journal, I'd just write a journal entry and do it. But I have to follow the rules of the program, and it doesn't let me split it up that way. So here I'm going to say $75, inventory adjustment. The memo is going to be cost of assembling clocks. Save and close. Done. So we've got the check there. Now let's assemble the clocks. That's done at the inventory activities icon. It's up in the company section. Click on it. First thing we're going to do is build assemblies. Alright, what do we need to build the assembly? Well, first we need an assembly. So we're going to describe the inventory assembly. It's going to be a palm tree clock. And we're just going to take the costs later, and this is going to be palm tree clock. And we're going to sell that clock for, combined with the clock movement, and sell for $75. So the sales price is $75. Income account, always set that merchandise sales. Now what we're going to do is we're going to tell QuickBooks how to manipulate the inventory and put the clock together. So to put the clock together, we're going to take one palm tree carving, one. This is called the bill of materials, and one small clock. That total bill of materials cost is $40. So it's going to cost $40 worth of materials for that clock, plus some portion of what we paid the girl who puts them together. So everything there looks good. We're going to hit OK. And it tells us we have 50 palm tree carvings and 50 clocks. So we can build 50 of the assemblies. Let's do that. And I'll just put a memo here. Assembly of clocks. And the date is the same date we do the check. So build and close. And now the clocks are built. And I could go into my inventory and look at that. Let's do that later. Inventory activities now. The trick with inventory adjustment is that as soon as you write a check to inventory adjustment, you get that money out of that account. So right now, it shows this other expense of inventory adjustment. So I'm going to go and adjust quantity value on hand, very important screen, and I'm going to adjust the value. And the value is going to come from an account I call, oh, it goes to the bottom, inventory adjustment. And what I want to do is I want to suck all that $75 that we gave to Rebecca, and I want to apply it to the assembly that we just made, which is the palm tree clock. We have 50 of them we made. The total value is $25,125. I'm going to add the $75 to it, and that will come out to $2,200. So add cost of assembly. Okay, so now the value of our palm tree clock is $2,200. Average cost per item is $44. Save and close. And if I want to look at my inventory, I go to Reports, Inventory, Valuation Summary. And here I can see that I have these average cost items. Let's make this current. So right now it's February 12th. And I'll refresh. There we go. So you'll see no palm tree carvings, no clocks. We used all those inventory parts, and we produced the large, oh gosh, here it is, palm tree clock. Sorry about that. The palm tree clock cost $44, and our total inventory, if we did a balance sheet, would come out at $6,325. And if we sell them all, they'll be worth $12,250. So if you ever want to know, before you do a transaction, how much inventory you have, you can pull up an inventory valuation summary. I don't want to memorize it. Okay. All right. We're now back to February 25th. We have finished check number 3 for Rebecca Walker. Okay, so if I go back in here and write checks, and I look at this 3, that inventory adjustment was taken immediately out and put in the inventory, which means if I go look at a income statement right now, let's do this for all, I don't see any inventory adjustment listed there. If you ever see inventory adjustment on your profit and loss, you have done something wrong. It should not appear. It may appear and be 0, but it should not have any value in it. Okay, so there's that. Now let's take a look at the balance sheet. There we go. Okay, so the balance sheet should show our inventory. Here we go. Our inventory is worth $6,325. My cash account, $4,175. Some of you have learned that you have to read these very carefully when you enter your quiz questions at the end here. So far we're only, our net income's minus $250 because all we've done is pay that rent. Let's see, where's our $75 that we spent for the inventory? It's not an expense. It's in this figure right here. It's value that we took out of our cash and put in our inventory asset. Okay, now we're going to make a sale. Okay, the sale is going to be a cash sale. When you do a cash sale, you go do a receipt. So it's 25th of February, 5 koa wood frames and 1 large frame. Here's where you do a cash receipt. And our customer was Fred Carter. Enter, automatically goes in, knows his customer. It's the 25th. And he's going to buy 5 koa wood frames. So I hit quantity 5. And I believe it was 1 large frame. Let's double check. 5 koa wood frames, 1 large frame. He's going to pay cash. pause this. Okay, we have our receipt all filled out. And you'll note that it computed the sales tax for us, so we could say first cash sale. Whoops, let's spell it right. And when we do this, save and close, let's double check before we stop. Well, we're going to double check by going to the QuickBooks practice. There we go. 5 would be sure to deposit the cash. That is the number one student error on this test. Watch how that happens. Save and close. If I do nothing more and I look at a balance sheet, you see undeposited funds. Any undeposited funds is an immediate do the practice again or a fail on the final. You've got to deposit your funds in the bank. And it's not hard to do. All you have to do is remember, after you create a receipt, you click on the bank and it will tell you there's cash, let's deposit it. So you click it, hit OK, there's the deposit memo, save and close. Now when you go and look at your balance sheet, change it to all, you'll see that there is extra cash and there's no undeposited funds. That's the proper way to do it. Okay, so we've done the sale. And we'll go back to, okay, now we're going to do a credit sale. We're going to sell 10 palm tree clocks to Holly Eva Art Shop with payment due in 30 days. Easily done. So we create an invoice for a credit sale. And the customer's Holly Eva Art Shop. And the date is still the 25th. And they're going to buy, oh, sorry, I forgot to quick add. We're going to buy 10 of the palm tree clocks. Be sure that you get the clock and not the assembly. Okay, 10 of the palm tree clocks with payment due in 30 days. This is important. There's a terms section in the invoice. We're going to ask them to pay within 30 days. That's net 30. But if we're going to offer cash discounts or some other terms to a customer, we have to make sure to set those. So those are the terms. Taxes computed. If we want, we could throw in a thank you for your business. And we'll say this is the sale of clocks to Art Shop. Just something so that we can pick it out of a list when we need to. Done. Now, we don't need to go to the bank directly afterwards because there's no, it'll take us straight to a deposit slip. There's no cash in a drawer anywhere. Alright, Hilo Hatties decides your stuff is good. They buy everything that you have left. So now we have to figure out what we have left in our inventory, and then we're going to sell it to Hilo Hatties, and they're going to give us a check. So a check means we're going to write them a receipt. We're not going to do an invoice. So February 26th. So here's the sales receipt. 26th. Hilo Hattie. Add new. There we go. And we're going to sell everything we have left. So how do we know what we have left? We go to our reports. We go to inventory, valuation summary, and we set the date equal to the 26th of February. And refresh. Alright, we have 49 of the large frames on hand. So let's sell large frame 49. So, okay, that's good. We have 95 of the small Koa frames. So I'll say small Koa frame, 95. Now we're getting kind of squeezed here, so I can take this arrow and I can get myself a third space. And of course we have 40 palm tree clocks left. So we'll take palm tree clock $12,340. And that's a pleasure working with you kind of invoice. $12,347. And they're going to pay by... All right, there. We got $12,347.50. They pay by check. Our date looks good. Double check it. We're going to go make sure it's the 26th. Okay. And I put a note in here. Don't forget, be sure to deposit the check. So we said close. We've changed the inventory. You could refresh it. Now it should be all 0. Good. And we'll deposit the check. I just clicked on the bank. This came up. I'll click on this. Okay. Save and close. One more thing we're going to do is we're going to pay that last bill that was due to Hong Kong Clockworks by way of check number 4, and then we're going to pay the sales taxes to the State Tax Authority. So here's the bill. The whole reason we enter it is so that it remembers. It remembered. It's now the 28th. So warning, when you're on the bill screen, the date is in the bottom left corner. I don't know why they do that, but that's where it's at. So I click on it. I'm going to assign a check number. I believe it was check number 3. Check number 4, sorry, 4. And that is done. Now, the last bill is the tax bill, and there's 2 different ways to pay it. Probably the easiest is to click on Manage Sales Tax, then Pay Sales Tax. All right, now here's where students really run into trouble. My check date is going to be February 28th. But once I've set that date, I have to make sure that I'm showing my sales tax through the same date. Don't forget to set both of those. Okay, when I do, I'm going to click Pay All Tax, and it'll automatically take all of the taxes that it found through February 28th, write the check, and I'm done. Okay, so if I go to Reports, Balance Sheet, and I see any liability there for sales taxes that are due to the government, that's wrong, and that'll cause you a problem. So let's take this up to All. Okay, we have a receivable, and we're good. So there's our closing balance sheet. Let's save that on the desktop as a PDF. Okay, so I'm going to call it QuickBooks Practice number 2 Balance Sheet. And it's on the desktop. Good. Okay, let's do the income statement. As soon as it saves, come on. All right, profit and loss standard. We'll tell it to give us all. We had $12,250 in merchandise sales. That's pretty good. There's our profit. Our rent expense comes out. You don't see inventory adjustment anywhere, and that's a good one. So we'll save that to a PDF. And this will be QuickBooks Practice number 2 Income Statement. Now I've asked you to do your accounting journal a different way so that it will save it in the wider side of the paper or the landscape format. So Reports, Accountant, Journal, we'll say All, and I'm going to go to the Printer command and choose my PDF printer. Okay, and then I can click on Landscape Orientation, print it. It'll pop up and say, where do I save it? Hopefully it'll pop up on front. There we go. So we're going to put it in the desktop, and it's going to be QuickBooks Practice number 2. Shouldn't say accounting. General Journal. Save. All right. So I'll put that balance sheet up. Here's your answers. Make sure that your numbers get entered into the quiz appropriately. Upload your statements, and you're good to go.